You're listening to AI Prism from Seoul Economic Daily.
Does this change my Korea allocation, my currency hedge, or my read on country risk premium? It's Tuesday, June 16. Here's why global investors are paying attention to Korea today. If you're managing an institutional portfolio, you're likely staring at your screen right now, trying to weigh that massive foreign capital withdrawal from Korea against Monday's sudden relief rally following the U.S.-Iran ceasefire. So we need to unpack what's actually driving these swings in this deep dive.
Yeah, we have to start with the sheer scale of Monday's reversal.
Right.
The hashtag KOSPI reached 8,545.98 on June 15.
Which is a 5.2% jump, right?
Exactly. Foreign investors net bought 1.0011 trillion won, or 715 million USD.
Ending 24 days of selling.
Yeah, the prior streak removed 75.96 trillion won, or 54.83 billion USD.
That is just a historic flight to safety. But for those holding unhedged positions, how did that impact the currency?
Well, Middle East uncertainty had depreciated the Korean won by 3.0% against the USD between May 1 and June 11.
Ouch. And a weaker one hurts. But it's particularly painful given Korea's energy vulnerabilities.
Definitely. U.S. crude exports rose 43.1% to 6.266 billion USD.
I see. Why the sudden spike from the U.S.?
The Hormuz Strait disruption blocked access to Middle Eastern heavy crude throughout March and April.
Let's translate that with our factory analogy. Korea operates like a factory that only accepts one specific battery size.
Exactly. 100% of Korea's massive oil refineries require Middle Eastern heavy crude.
So they can't just efficiently swap to the lighter crude coming from the U.S.
Right. This infrastructure mismatch imports volatility immediately.
So we have this structural energy volatility. But there is a separate multiplier on the financial side with those two new London 3x leveraged ETPs on Samsung and SK Hynix.
Yeah, the London 3x leveraged ETPs hold 284,320 USD and 543,335 USD.
Which honestly sounds tiny. Why would small London funds shake the whole Korean index?
These specific ETP listings amplify hashtag KOSPI volatility immediately.
Oh, is it because of the rebalancing?
Yeah, the daily rebalancing mechanism forced domestic equivalent ETFs to surge from 1 trillion won, or 714 million USD, to between 4 and 5 trillion won, which is 2.8 to 3.5 billion USD.
That forces massive continuous buying and selling of the underlying tech stocks. So, getting to the bottom line here.
Because Monday's inflows reflect ceasefire relief rather than fundamental upgrades, current data supports a cautious reduction in Korea exposure.
The FOMC outcome and Samsung's Q2 guidance serve as the single determining catalyst for whether this market reversal actually holds.
Despite the ceasefire, unhedged refinery mismatches and amplified semiconductor volatility remain durable threats to your country risk premium, leaving you to ask whether this relief rally is just a temporary mirage.
That's today's AI Prism. Global investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.